Hello everybody and welcome to Green Star Trading with me Tom, and welcome to episode 2 of our new series, An Introduction to Elliot Wave Theory. In this episode we'll be covering a corrective wave called a zigzag. It's a free wave structure made up of an A, B, C, labelled with letters instead of numbers like our impulse wave. We will cover other corrective patterns in future videos such as triangles and flat patterns. Now let's have a look at our guidelines and rules for our ABC zigzag. Zigzags most often occur in wave 2, as I've highlighted here. Why is that? That's primarily down to market psychology. As we discussed in episode 1 about how the wave 2 is often deeper than the wave 4, the reason for this is this whole move up likely represents the reversal of a prior move down. And so the first retracement of the new move up is the wave 2. This is the first opportunity and only opportunity the bears have to force a lower low and continue the previous downward trend. And therefore the bears tend to be strong in the wave 2, resulting in a deep correction. The zigzag is the deepest corrective pattern and therefore is more likely to occur in a wave 2. It can occur in a wave 4, it just isn't likely. Or, I shouldn't say isn't likely, it isn't as likely as it occurring in a wave 2. The subwave count for a zigzag, ABC, is 5, 3, 5. Now this means that the A wave will have a 5 wave structure of an impulse wave. This is why we've still got our Elliott wave rules for impulse waves here. Our next structure is a 3 wave structure into our B wave. A subwave count of 3. This in itself could be a zigzag, or a more complex corrective pattern which we'll cover in future videos. The C wave is also a 5 wave structure. You'll have to forgive the asymmetry here. Here you go. It's also a 5 wave structure, impulse wave down. The next rule we're going to observe is wave B cannot retrace wave A. Now I said rule for a reason. B cannot come back beyond the start of where A began. This is a strict rule. If this occurs, you are not observing a zigzag. You are likely observing either a running flat or an expanded flat pattern. Now, the next guideline. Wave B likely retrace between 38.2 and 78.6% of wave A. So we need our fifth retracement tool here. Pick out the start of our wave A, come down to the bottom of our wave A, and we can find our wave B anywhere inside of this green area here. Now, let's just position it at the 50 bound. I tend to find that the 50 comes up quite often, but your most likely targets are the 38.2, 50 and 78.6. But anywhere in this green area is likely. But because we also are observing a rule that wave B cannot retrace wave A 99.9% retracement of wave A is possible. Just not very likely. Wave C will likely equal wave A. Let's get our fib extension tool now. Come down to our A. 0 bound on our B, and let's stretch our C down to the 100 here. This is where we are most likely going to find our C. In other words, C is the same length as A when projected from the B. That is your most likely target. Now, wave C can hit multiple extension targets, 61.8, 78.6, 131.8 and 161.8. So let's get our extension tool again. Wave C can finish at the 100% as we've discussed, but it can also finish at the 61.8. It can finish at the 1318. It can finish at the 1618. It could finish at the 78.6. Now let's just take the 61.8 for an example. if you see 5 waves down into an A, 3 waves up into a B, and 5 completed waves down into a C at the 61.8, the next thing you'll be looking for, obviously, is a bounce to resume the previous trend. So you would want to see 5 waves coming out of this ended correction. Obviously, this first leg up of the 5 waves was itself, you'd be looking for 5 waves to recognize that you are now in a continuation of the previous trend. You are in a 1. This would be ABC, and then into another 1 of another wave. You would identify it by having 5 waves up. Now, another way to identify this is what a lot of people either refer to as a double bottom, because they're not necessarily aware or don't necessarily follow Elliott Wave, so they won't be counting 535. They'll just be looking for a point and then another point and a reversal. So they would call this a double bottom. But this could also be an inverted head and shoulders, where the symmetry between the A and the B is matched by the symmetry of the 1 and the 2 from the C, resulting in a head and shoulders pattern. People would often draw a neckline and then see the wave 3 coming out as a resumption, or as that pattern of the inverted head and shoulders completing. But all we are looking at are a series of Elliott waves which form these shapes. But I'm simply pointing out that you don't need to necessarily know the exact count of Elliott waves. If you're familiar with these kind of technical patterns, that's good enough. You might not necessarily know where you are in the greater trend, but you'll know that you're going to most likely get a completion to the upside. Now, let's get rid of that for a moment, and let's bring our wave back to 100% of wave A. Now I'm going to give you a little pro tip here for a minute. Let's say that you've seen 5 waves down into an A. You've seen 3 waves up into a B, and maybe you've seen 1, 2 in a subwave structure of 5 waves down starting into a C, but you've yet to fill in this big gap. You have seen a pivot at the B though, and you're on your way down, but you've yet to see any more price data. Is there a way you can potentially project where the C is going to be? There is. Go and get yourself a parallel channel. Click at the start of the A wave, then click at the start of the B wave, at the end of the B wave, move down to the bottom of the A wave and place the channel. Now from this point you can measure the most likely occurrence, which is a 100% extension of the wave A. Remembering you've identified this pivot and we've seen the price action coming down and starting to form a 5 wave structure. Take your fib extension tool, go to the top of the A, where the A began, bottom of the A, and then extend from the B to find that 100% target. Move the C to the 100% target and notice how it hits the bottom of the channel. Now this is not foolproof, and it is by no means a crystal ball, but it's a helpful little guideline. If you want to be able to try and look into the future before we finish this C, placing this channel in this way once you've identified the pivot of the B with the completed 3 waves, that's what you're looking for, remember, before you see a reversal, this will give you a good possibility of identifying where the C is going to complete, but it is not foolproof. So there, we have covered our most likely occurrence in wave 2, we've covered our retracement wave A rule, we've done everything we need to do here. Now, there's another reason why I've left our rules for impulse waves up here, and it's not just because the 5 waves here and the 5 waves here are impulse waves and therefore should observe these rules. It's also because the structure of an ABC zigzag looks very much like something else. The subwave count is 5, 3, 5, but the subwave count of an impulse wave is also 5, 3, 5, 3, 5. So the question you have to ask yourself when you see a pivot and a 5 wave move down and a 3 wave move up is, are you in an A, B zigzag, or are you perhaps in a 1, 2? You see what I'm saying? 3, 4, 5, because we have the exact same wave count here. Now that can be very confusing. Well, first things first, the 5 waves I put here have gone beyond the start of our 5 waves up. Alright, so in this case, this could not be corrective, could it? It couldn't, because the C couldn't possibly go beyond the start of the impulse wave up, because if this was a 1 and these 3 waves represented a 2, well, we would have broken this rule. Wave 2 cannot retrace wave 1. So there's at least a cut-off point for your C. However, identifying whether you're in a C or a wave 3, well, this could be tricky because of the extensions open to a wave C. It can go to 1.618%, which is the exact same target for a wave 3 in an impulse wave when projecting the wave 1 from the 2. See what I mean? It can be tricky. So what can we do to try and identify where we are and to give us some reassurance that we're looking at a correction rather than an impulse wave? Well, first of all, you've got all of your prior count of all the different waves and subwaves, lesser degrees, greater degrees. Have you counted out a cycle wave, a primary wave, an intermediate wave, a minute wave, so on and so forth? And therefore, you have an idea as to whether you should be seeing a correction before another move up, or whether you should be seeing the completion of a wave and then a reversal into a new downward trend. That's number one. Number two is to keep in mind the different rules and guidelines we've got here. Now, a B is not as likely to retrace as deeply as a 2. So, let's just, before I confuse the hell out of everyone, a B is more likely to go to 38.2% than the 2 is. Okay, the 2 is more likely to go to 61.8% or deeper. So if you're convinced that you're looking at a zigzag, or you're starting to see a zigzag, and you're hoping to buy the pivot down here somewhere, or whatever, let's just say that you get a very shallow B, maybe only 23.6%. That increases the probability that you are indeed observing a B, if there's a 3-wave structure, instead of what would be a likely deep wave 2. If the wave C, of course, doesn't equal the length of wave of the A wave, but stops at the 61.8 or the 78.6, and then you see a 5-wave structure forming here, and it takes you beyond the top of the B, then this was a zigzag and you are resuming the previous trend. So there you go. However, what if you get the situation where a zigzag can become very confusing? You get a very deep B, maybe going beyond the 78.6, right? 61.8 to 78.6, this could look an awfully lot like a 2. And then let's say you go beyond the 100% extension of the A for the C, and this starts to extend to the 1.318 or 1.618. Well, at this point, you're going to be becoming very much more convinced that you are actually seeing this pattern rather than an ABC. Now, the only way you can be sure that you're not in a 1, 2, 3, 4, 5 is when the price action pivots from the C, you are looking for 5 waves up. You're looking for a subwave of 5 first, then a 3, then a 5, so on and so forth, because of all the waves of lesser degree. So you're looking for a 5-wave structure to form. If you come back beyond the A, then it is highly likely the zigzag has completed and you are moving up into the previous trend as before. Now, why am I saying that? Well, let's go and put our impulse wave on top. What's one of the rules of our impulse waves from the previous video? Wave 4 cannot retrace the top of wave 1. Here's 1. If 4 from our proposed C or our 3, if our move up here in 5 waves were to take us beyond the 1, that's also increases greatly the probability that you have observed a completed zigzag. Having taken out, this can no longer be a 1. So this must be a new the continuation of the previous trend. Okay? Now, it's not a certainty because there are other patterns such as lending and leading diagonals which can put even greater level of confusion onto whether you're looking at a zigzag or not. But they are in very, very rare occurrences, especially in this situation. So there's a couple of guidelines. I know that's really confusing, and I know this seems quite open-ended, but other corrective patterns we'll cover in future videos are not this open-ended. They tend to be stricter and have much clearer completions. The zigzag can be a bitch. It really can. But just bear in mind that when you're looking at this 535 wave countdown, think about the depth of the B in comparison to the depth of the 2. Think about the length of the C in comparison to the length of a 3. Think about the rules of not retracing the 1 for an impulse wave, okay, and think about the corrective wave you would have to see in a wave 4 before continuing lower. All of these little things will help you and give you better odds of identifying whether you are in a corrective 5-3-5 zigzag or whether you're in a 1-2-3-4-5 down. Okay, of course, the final rule thing I want to cover here is the possibility that obviously this correction is correcting a greater uptrend. But this whole movement of 5 waves up and 3 waves down doesn't necessarily have to be the completion of a trend, it can simply be a subwave of it. So, for example, 5 waves up into a 1, 3 waves down into a 2, and then we go into a 3-4-5, and so on and so forth. Obviously they'd be off at much higher levels. So, once again, observing the 3 waves inside of the greater trend, just as you observe the subwave count in the 2 and the 4 of waves of lesser degree, you must do on the higher time frame too. And the same rules apply. Look at this as a completed wave 1 and 2. Where would our ABC likely complete, our wave 2? At the 61.8. So you could say, alright, you'd be expecting to find the C complete here, which would complete the wave 2. And then you can observe all the same rules we were just talking about, and extra bits of guidelines and help, the channel to find the C, the wave structure, whether or not we invalidate what could be a wave 1 down with a wave 4 up, and all those other things that you should go back and watch and listen to again. And this would confirm where you are in the greater trend. Now, I'm going to call it there, guys, because I don't want to waffle on anymore. But that's basically zigzags in a single episode. So next episode I think we'll cover flat patterns in episode 3. Hopefully get that out next weekend. If you're new to the channel, please subscribe and smash that like button. And if you're familiar with the channel, smash the like button anyway. And all of you, please, if you want to, leave me comments, let me know what you thought of this video. If you like the way this series is going so far, if you have any advice about how I'm doing it, or you want to comment on how I'm doing it, please feel free to do so. And I'll see you again next week, hopefully. Take care, guys. Bye-bye.